Good morning, everyone, and thank you for joining us for our weekly webinar, Market Update. Today is November the 14th, 2022. Today we're going to be talking for just a minute about global supply chain issues and how that's impacting inflation. We actually have had some good news, and it looks like that inflation is moderating a little bit. In fact, in June, inflation was up to 9.91 or 9.1% on the June reading, and as of the last reading that we had, it was down to 7.7. So we've come down actually quite a bit off from its high, and it looks like that we're going to continue to keep coming down. The deflationary pressures seem to be helping us quite a bit, and some of the items that were perhaps stoking the inflationary environment have seemed to be moderating a little bit as well. And we're going to talk specifically today about global supply chain issues. And what I want to show you here on this chart is that this blue line is the global supply index. And the best way to describe this is in the ports. I don't know if you remember back a couple of months ago, or maybe 3 or 4 months ago, we had tons and tons of ships backed up in the ports that they couldn't get unloaded because they didn't have help to get them unloaded. In fact, as of the reading, it was at a time, it was like 100+ ships that they were having stacked up back in the port that they couldn't get unloaded. Right now, it's at about 10. So it has come down substantially as far as those global chain issues. What this means to the economy is that if items aren't able to be on the shelf as soon as they're being demanded by the consumer, it makes the consumer willing to pay higher price for them, and it becomes a very inflationary type of scenario for the goods and services. And so if supply can meet demand on an on-demand basis, meaning that when consumers want to buy something, that there are those items on the shelves, it makes it so that the inflation isn't nearly as high just because people are paying whatever the normal cost of goods and services are, rather than paying a premium because there are limited supplies on the shelves. And if you notice here in this, this blue line here shows where the global PMI suppliers delivery time index is. And basically all that big name means is that's how quickly deliveries are being made based upon what's being consumed. And you can see that we are right at basically pre-COVID levels for where we're at right now as far as delivery time. So as far as the global index, we are almost right in line with where we've been for quite a while. If you look at the other side of the equation, which is the core goods inflation, you notice that it tracks it pretty well. And that core goods inflation has been coming down as well and is tracking that quite nicely. There's still some ways to go. The biggest concern that we've got right now is just we think that at the next Fed meeting that they're going to have, they'll probably see this softening a little bit in the economy. They'll probably go ahead with the 50 basis point rate increase, which is a slowing from what they have done in the past. And we anticipate probably at the first of the year, we'll have another 25 basis point increase in interest rates. But as long as the economy continues to slow, there may even be a pause at the end of this cycle to where we can catch our breath a little bit and let the market catch up with what has been going on. We did have a very good market last week. Markets were up about 5%, 5 or 6%. It's being reflected in the portfolios, which is great. We'll take it all the time. And we continue to anticipate that as inflation moderates, as interest rate hikes moderate, there is pent-up demand right now for the market in putting money back into the market and seeing that markets can go higher. The only problem that we've got right now is just that the market gets too exuberant too quickly, and it creates a scenario to where it overprices or overbuys, and then we have to go back through some corrections. So we still do anticipate volatility. We still do anticipate that we need to have a very diversified portfolio to be able to make everything work. But overall, we are seeing improvements in the market, which is really good. So for today, we're going to go ahead and leave, but thank you again for signing in with us today. And if you have friends or neighbors that you feel like that this might be of use to, go ahead and forward this link to them as well. We would greatly appreciate that. Again, thank you so much, and we'll see you again next week.